Hey guys, Jason Sharon here from Home Loans Inc. here to talk about real estate, manufacturing, and mobile home loans, understanding how to finance those. A little bit about me. I'm the broker owner of Home Loans Inc. I was in the Navy for 20 years, enlisted for 9, and commissioned as an officer for 11. Became a licensed loan officer in 2015. Started my own company in March of 2018. I'm licensed in West Virginia, Virginia, North Carolina, South Carolina, Georgia, Florida, and Alabama, in case you need any help there. If you need help in some other state, just let me know, and I've got a great network of great guys to connect you to as well. And a little fun fact about me, I'm a certified barbecue judge. Production accomplishments, just so you know that the guy talking knows what he's talking about. 65% VA loans over 6 years. I average about 30 units a month, which is significantly above average. Most loan officers don't do 30 in a year. I'm 60% purchase, 40% refi, so I'm not just some refi shop that's chasing um, postcard stuff. I've written and published 3 books on mortgages: VA Mortgages Declassified, I Hate Renting, and Mortgages for Realtors. You can find all those on Amazon to purchase. And I've been interviewed by several national magazines about VA loans, including Money.com, National Mortgage Professionals of America, and Housing Wire. Real estate, a funny term that I came up with, or probably got it from somebody a while back, is kind of what I say about manufactured home, mobile home real estate. Manufactured homes are just tough to finance, like really tough. Most lenders won't even do them, and those that do choose to originate loans for manufactured homes uh, tend to make it harder to qualify, higher rates, higher fees, that kind of stuff, because they're a lot higher risk for the lender. So let's talk about, I have to explain this about what's somebody manufactured versus mobile versus modular. Manufactured homes and modular homes are the exact same thing. It's just two different terms for the same thing. A modular home is built in pieces in somewhere and then assembled in on the location. A, and it's treated exactly like a traditional stick-built home. A manufactured home is built in its entirety in some warehouse, put on wheels, registered with the Department of Motor Vehicles, and then towed to the build location, set up, maybe 2 halves, maybe 3 halves, whatever, but then it's set up on the home site in its entirety. So that's the difference there. A lot of misconceptions I have to fix that every week. The costs are higher for a manufactured home loan. It's tougher for the borrower. They need a lot of places require a higher credit score than a traditional home loan. Usually the insurance, homeowners insurance is double what you'd expect to pay for a traditional stick-built home, just because they're much easier to damage and a lot easier for a total loss in a catastrophe. The interest rate will generally be a good bit higher for a mobile home versus a traditional home. And then the closing costs associated will be higher. There's always going to be 9 out of 10 times there's going to be an additional engineered inspection to make sure that the it's tied down properly, and that's above and beyond the normal home inspection that most people get. And the appraisal costs more because there's going to be more research for the appraiser to do and more things to include in the appraisal report. Usually about $75 more. So you're looking at $500-600 more just in closing costs plus higher insurance plus higher rate. The property has to qualify. So not only do you have to pass, your credit, your income, your assets, but the mobile home has to pass as well. Cannot be older than 1976. That's whenever the law changed, and then mobile homes were set up effectively with the manufacturing standards to be deemed to be insurable by Fannie and Freddie. Most lenders won't go older than 15 years. I do have some that do, but it's fewer and far between. The most home must be on a proper foundation, permanent foundation with the right tie downs, permanent skirting, the right number of trusses, the right size footers, that kind of stuff. The tongue and wheels have to have been removed. Has to be detitled from the DMV and registered as real property with the county. You're also going to have to make sure it still has the HUD label plates and all the labels and plates. Excuse me. The metal plates are on the back, usually 1 foot in and 1 foot up from where the taillights were whenever it was transported. And then there's going to be a label inside, usually near the circuit breaker box or the cabinet sink or the hot water heater or something like that. And then it has to be a double wide or larger. There are some exceptions for single wides as far as getting a mortgage on it, but vast majority of places won't do a single wide. And then it could not have been moved from its original location. So if it was moved to set up on 123 Main Street, and then somebody moved it to 456 Elm Street, you're not going to be able to get a mortgage on that There's some exceptions for VA, but there's a lot of additional inspections for that if you have that scenario. So what if the property doesn't qualify? So you're good, your credit's good, your income's good, your assets are good, but it's been moved or the label plates are missing. Um, you're not going to be able to get a mortgage on it. If the label plates are missing, there is a way to get replacement label plates. But that's a pain in the butt, but you can do it. But if it's been moved, if it just doesn't meet the tie downs, if it's not permanent foundation, you're not going to be able to get a home mortgage on it. You're going to be able to get a specialized manufactured home loan from some company out there, XYZ company. I don't have any to recommend to you because I'm not licensed or set up with any to do. But those are very high rates and high fees. So you're probably going to want to pass on to the next property, or you're going to want to get the property into to meet the requirements for a mortgage. Like right now, I've got a client that has the very high interest rate loan. We're working through an engineer to get it up to code with the tie downs, and then we'll be able to do refinance to pay off that high interest loan. States I'm licensed in: West Virginia, North Carolina, South Carolina, Georgia, Florida, Alabama. My contact information and my email is jason@homeloansinc.com. My phone number is very, very easy, 843 low rate. And then there's an MLS consumer access website there as well for you. Thanks. Have a great day.